The next topic is also a mega trend that has just started. Is this DeFi, Decentralized Finance. Professor Peter Meier, my old friend, will start with a keynote and will also introduce this panel. Yes, he's a professor, has written books, like a really well-known book on alternative investments, some other important publications in this area, and he's also like not only a theoreticist, and he is as a practical person working for many pension funds and representing them in the board. So this is really very nice to have you, Peter, and yes, the floor is yours.
Thank you.
Peter,
so I have to write a new chapter in this book about cryptocurrency and blockchain, but I'm not sure if I'll do that. It's my great pleasure to be here with this topic, and it's my great pleasure to introduce Thomas Scherr. Thomas Scherr is a member of the executive board of SAP. It's a large IT company. Board member of SAP Europe, and he was for many years, until the end of last year, the trustee president of the SAP pension fund. So he has some experience in the pension fund management. And my other colleague on the panel is Dill. He's portfolio manager and partner at SIGLO Capital Advisor. This is one of the very few advisors specialized on alternative investments. To start, we would like very much to know a little bit more about where you are in terms of crypto, maybe not so much DeFi, decentralized finance. So I want to ask you, who of you has already got in touch with crypto in any form? Oi, almost all. Great, so I don't have to ask who has never heard about crypto. Very good, good for us. I myself, I got in touch with crypto about 1 year ago, and I saw advertisement of Compound. This is a DeFi, decentralized finance platform, and they announced a new product special for institutional investors, where investors can earn 4%, just fix, and you can get out and get in, no problem. You get 4% in US dollar. I told this story to some of my colleagues at the pension plans where I am in the investment committee, and they said, oh, nice, but this must be a fake. It's not possible to give you 4%. And so I got for myself a job to find out how it is possible to promise to investors 4% fix, like a bond. I might come to this to an explanation how it's possible later, but I want you give some introduction, about 10 minutes, about cryptocurrency and DeFi, and I find it quite a good way to approach crypto by thinking about Web 3.0. Web 2.0, which we have now with Google, the big techs, Facebook, and so on, is 2.0. And 3.0 is the new internet. It has already started. Is somebody already using Brave, for example, the browser? Okay. And this Web 3.0 is different from the earlier webs. For example, the user has full propriety on the data. That's one advantage. But there are other, it's on the blockchain, it's decentralized in the sense there is no Google who controls your data or all the things happen on the platform. The blockchain belongs to the people who own governance tokens, coins, or whatever, and it's in a way a very democratic system. That's one way to look at crypto and also at DeFi. I think we are already there, but not for each application. It will be as easy to use, it will be as easy to do investments, as we are used on the internet now. On the right side, I have the picture of Bitcoin. The problem for institutions is the volatility of cryptocurrency. Bitcoin, the most conservative crypto coin, has a volatility of 5 to 10 times of stock markets, and that's quite a bit. But if you look at this chart, Bitcoin almost from the beginning, it's a logarithmic chart. You see a lot of volatility, but you also see a very clear, strong trend. And if I would update this chart to the situation today, you would see a little bit go down, but not too much. What are the building blocks of DeFi, decentralized finance? It uses mainly, in most of the cases, Ethereum, the second most important cryptocurrency, as a platform. Bitcoin is more or less a currency, and Ethereum is a platform to build on it smart contracts and a lot of other things. You need a second block, you need cryptocurrencies. When it comes to DeFi, people are more conservative than traders on the crypto, and they use usually stable coins, meaning cryptos which are pegged to the dollar, hedged to the dollar. And the third part or block of DeFi are the protocols. Protocols are just computer programs which run automatically. One of the programs is Compound. I talked about Compound offers you 4% fixed interest rate for investments. That's one product which is in a way amazing. DeFi has come out of nothing 3 or 4 years ago, and at the moment, or during the last months, about $100 billion were locked into lending or liquidity providing. There are some other ways of doing investments. 100 billion is not too much, but what is interesting, this number of 100 million has been not stable, but the level has been kept also in the situation now where cryptos have lost quite a bit of value. I try to give you a definition of DeFi. DeFi represents a financial infrastructure for exchange, lending, borrowing, and trading. And most of the properties of blockchains, decentralized, peer-to-peer transaction, and so on, are also true for DeFi contracts. DeFi has already entered a new stage with DeFi 2.0. In this area, in the first years, what you could get are lending, borrowing, like banks. It's an alternative to banks. But during the last 1-2 years, much more innovative financial contracts came up, and one of them are perpetuals, perpetual futures. It's an old idea, but it could never be realized in the traditional financial world. But in the world of the blockchain, it's implemented by algorithms. On the right side, you see some names. Again, I want to take out Compound. We are looking a little bit closer. Compound has a value. The comp is the main coin of Compound, of about 10 billion actually. And you see there are already many suppliers, platforms for DeFi products. Now to Compound, this company who promises 4% for an investor, this daily liquidity. Compound is a D-app, a decentralized app, a program running on the platform Ethereum. The program is designed mainly for earnings interest rates, not only. Compound is on a blockchain, but Compound, to do these investment products, has also Compound Labs. This is a company owned not only by these decentralized owners of the coin, Comp, or there is also a governance coin which belongs to Compound, but also to 1/3 is owned by venture capital firms. And so this lab, this company, makes sure that the 4% can be guaranteed. Compound does borrowings with the money they lend, and by borrowing in different coins or stable coins, they can achieve higher returns than 4% and compensate for this, to guarantee this 4%. There is some risk in it. You could imagine interest rate situations where it could be difficult to guarantee this 4%. But until now, as far as I can figure out, this system is successfully running. Some conclusion. DeFi at the moment is still in an experimental stage. A lot of things can happen, a lot of risks. I want to mention only the hacks. It is estimated that about of this 100 billion, about 10%, it means 10 billions, were hacked during the last 2 years. Not all hacks is lost money, but some of them. And so you have these risks in this area because a lot of these algorithms and DeFi apps come out and are not foolproof, but after the hacks, they can make sure that the same hacks are not possible in the future, but there might come other possibilities to enter for criminals. Not all hackers are criminals. Some are, I think you told me, are white hackers. They do it for the good, for this DeFi application, so that they can improve by their hackings. Cryptocurrency and DeFi are here to stay. That's my very strong belief. And I have here a citation of Campbell R. Harvey. This is a professor of one of the Ivy University in the United States. DeFi will replace all meaningful centralized financial infrastructure in the future. This is a technology of inclusion. Everybody can participate, whereby anyone can pay the flat fee to use and benefit from the innovations of DeFi. It's a horror. If you were all bankers, you would be a little bit unpleasant with this citation, I think. Yeah. Now, to my panelists who were very patient till now, for their own introduction, I want to ask you, how did you come in touch with crypto in your function or personally or in a mixed way? I don't know.
Maybe I can start. So I came in touch basically on a mixed way. As you have mentioned, I was CFO of SAP Switzerland for more than 10 years, as well as trustee president of the pension fund. And it is twofold. I came in touch, of course, with investment. in the pension fund. But for me, the majority is then the technology part. So what is blockchain? So we were there in an early stage, and we had a look early stage in those topics as well. So that was my first touch point, Peter.
Great. Michael?
Great. Thanks, Peter. On my side, so SIGLO, just to recapture, we select and combine strategies and alternative asset classes which are basically uncorrelated and do have nice crisis and inflation benefits. So I'm in charge of liquid strategies, to add another complicated word to the mix, manage future CTAs, so trend followers basically. And I got quite excited actually around this time last year when I learned about the first CTAs that were invested, started to allocate to Bitcoin futures, Ether futures. So that was a very small allocation, and it was like in a regulated future contract which is traded on the CME exchange. So but still, you know, given all the publicity, it's quite a big thing for us. And the other thing I want to mention, I mean, we have seen a massive growth in dedicated crypto funds. It's a huge universe, it's billions of inflows. And it's actually a quite diverse mix of strategies. So you don't only have the long-only funds, you also have arbitrage funds, high frequency. So it's a full set of strategies which are actually providing a quite interesting risk-return profile. And yeah, personally, I also got involved, of course, a year ago. It's been quite a roller coaster. I just find it fascinating how you see these animal spirits in these markets with euphoria, leverage, then panic. It's just behavioral finance.
But you did never buy pizza with 1,000 bitcoins?
Wasn't me, no.
If I start with Michael, if you had to advise a pension plan to invest in this compound 4% fixed liquid product, or the alternative is to buy, let's say, a basket of cryptocurrencies, which one would you recommend?
So if I had to, so basically, I mean, the thing is cryptocurrencies. It's many different things, as you mentioned. I mean, it's a digital money like Bitcoin, which is nowadays store of value, digital gold. You have DeFi, which is basically the disruptor of the banking system. DAOs, NFTs, you name it, right? So it's a lot of things going on. So I'm in favor of a diversified approach. You know, it's such a mega trend actually in DeFi. I mean, if it works. If not, then of course not. But it has such a huge upside, so I would try to diversify into many different protocols. I mean, it's also a very complex space, to be honest. You need, if you want to do it as a pension fund, you need resources and the capacity to monitor, etc. So it's not straightforward.
Or a good advisor.
Or a good advisor, yeah.
Would you, at the moment, already start with this diversified portfolio? Would you also include a DeFi, like a lending product like this compound 4% fix? Would you consider it?
Absolutely, yeah. I would look at it. I mean, it's one of the established ones, right? So, but maybe
absolutely. I mean, that is an established one. But coming back to your question, Peter, I mean, I only invest in what I understand. And all those two products you have mentioned, I don't really understand, when I'm being frankly honest with you. So maybe I wouldn't invest at this very moment in both of the products. And
that means you wouldn't trust the advisor who would advise you to use it?
I mean, when the advisor can tell me what is the economic value behind. I mean, it's all about trust in the end. And it's all about what is the collateral behind it. I mean, in the economy, it's a contract. It's as simple as that. It's always a contract. It's a mutual agreement, and there is a value in it. And with a cryptocurrency, I don't know. I mean, my impression is that there are some nerds in the dark net doing some cryptocurrencies and selling that off. So, as I don't understand that, I wouldn't invest it too much.
So Michael, I think it's difficult to, if you have on the pension fund side a trustee which works for one of the largest IT companies in Europe, it's not so easy to convince him for.
Yeah, I see some challenges there. Yeah.
It is easy. You just need to let me know what is the economic value behind, what is the contract behind, and then I think it makes sense. Basically, Peter, I think the concept is very interesting. Just to speak on that as well. But I feel we need to distinguish, to separate between the technical platform. And that is something which is very much interesting, where SAP is also investing a lot in it, and the value of a currency. You know, I think the technical platform, that's really exciting, because I think it's the democratization of the data. That is definitely something what is interesting and is on my watch list. About cryptocurrency, we have just started the discussion. There is definitely more to come about that.
Mm-hmm. Okay, yeah. Questions from your side, or objections, comments? Yeah, please.
I'd be interested in what the panel's opinion is on central bank digital currencies.
CBDC.
I'd be interested to hear what the panel's opinion is about central bank digital currencies.
That's a very good question. May I kick off here? And that comes to my comment before. I mean, behind a national bank, there is an economy. And we know the economy, how it works, it generates value, the whole economy. And for those national banks, I think that is definitely something which is more trustful than a global currency itself. I mean, we just need to think about, and I read from the Zurich State Bank, I read the anniversary book, and not to forget, about 120 years ago, the Zurich State Bank was issuing a currency itself, you know. 150 years ago, that we have had so many different railways company, and that formed they consolidated to the big SBB in Switzerland again. And I think this consolidation will start if we have a national bank behind. That personally, for myself, as long as I trust in the economy, I think that is definitely more tangible for me than a cryptocurrency, which is just as part of a blockchain then.
Just like to add briefly to that. I mean, it must be China's dream to have a digital currency, right? They have full control of the supply, and I'm a bit worried. You know, gives them a lot of tools with regards to applying haircuts on deposits, for example. It's very easy just to take off like 10% of your deposits, right, in like no minute, and that's a bit of a concern. They sell it as a good thing, and I see some benefits of that. But yeah, I mean, in terms of control, you give out a lot. You cannot store your value under your bed or in your safe. You know, that time is over, and then they can introduce negative interest rates if they want to. So they have full control of the money supply, and so that's a bit of a.
Yes, please.
Yes, I have a question to you, the panel host. It seems like you're advising pension funds, right? So, and you seem to understand a little bit about these DeFi projects, or, you know, have you been able to convince a few of the pension fund managers and decision makers to actually invest? And who are they? Are these people that understand more and that's why they invest? Or are these people that are willing to take more of a risk than the panel participant that is waiting to understand?
I do not like this question. But there are no bad questions, so I have to give an answer. The answer is, first I was laughed, but now I think people are become to be interested, and I sent some emails with attachments, and they read it. That's a state where we are. But I think it's a long way for normal Swiss pension fund. Does somebody know a pension fund who has already started in Switzerland with cryptos? Not mines. They don't.
Well, they do actually, Peter.
They do actually. Yeah, you know. Yeah, okay.
We are the futures actually, but.
I have another question. I mean, pension fund investment at the moment is very much about SRI. And at the same time, I read that, for example, Bitcoin uses electricity as the state of Denmark. And most of this is produced in Iran, in Kazakhstan with non-renewable energy. Is that a topic, and how do you address that?
Big topic.
Yeah, it's obviously a big topic, especially in Europe, but also in the US. And it probably makes Bitcoin less favorable versus other layer ones, proof of stake layer ones, which are much more energy efficient. So it's a consideration. But I also read about, I mean, Bitcoin community is also arguing that a lot of initiatives that kind of try to promote clean energy usage or kind of energy that's not used anyway, so like nat gas that's just burned, so they could just use miners. But of course that's a consideration. And actually I've seen one product which is carbon neutral Bitcoin. So they buy carbon emissions to compensate for the energy usage.
Yeah, for me the energy problem in a way is solved, but not yet. Did you already talk about proof of stake? Like Ethereum, the second largest, is switching now gradually from proof of work to proof of stake, and this reduces energy consumption by factors of 100 and more. And there are also blockchains in the space which are under the 10 largest, Solana, for example, which must be very, very efficient, not as safe as Bitcoin or Ethereum. Ethereum in the new world, we don't know. So I think, let's say, technically, the problem is already solved. But the big ones, like Ethereum, need time to do the transition from proof of work to proof of stake.
Super.
Yeah, maybe coming back to this quote here, that centralized financial infrastructure will be disrupted by DeFi. How far away do you think we are from real-life use cases where someone actually borrows money for a real-life purpose, for consumption or for investments, really intermediated through DeFi in an automatic fashion?
I give you the same answer as Elon Musk was asked when a man put their foot on Mars. And he in the interview, he was quiet for about half a minute to study about this. And he said 5 to 10 years. And I also say 5 to 10 years. Yeah. But I think it will be a very gradual thing. I have some insights into one of the retail banks in Switzerland. And this bank also started some years ago with fintech, cooperation, and so on. And you will not see if one of these, let's say, next fintech is a blockchain-based, technologically driven fintech company or not. I think banks will invest into these vehicles. So banks will play their role in the future and will not just be overrun by this solution. That's my perception at the moment.
Additional to that, Peter, I think the economy is just running into a platform economy. So before it runs all to the blockchain, I think this step will be in the middle, that we have a kind of platform economy like supplier, vendor-supplier platform this is also highly automated there, but you have somebody who provides the platform. And I see also, I mean, you were mentioning the risk about hacks and that stuff. I think this is also not yet solved. Just remember a couple of weeks ago, there was a huge hack into a Java product. And then this was also a public platform then. And it took then a couple of weeks until it has been finally solved. If you have a provider, a platform provider, they are paid for that to do so. So I think that is much quicker. And this is definitely something what needs to be considered, in my opinion. And therefore, I feel that the platform economy, who has just started, that is first to the next 5 to 10 years, it will be that the dominant scenario. And the blockchain will be parallel. As soon as this is then more commodity, I believe that will change then as well.
I have more questions for my panelists, but you have full authority.
No. We have still time. I think.
Coffee or crypto?
I just want to, coffee or crypto is good. I just want to drop a few names. We have a few people really here that are listening us, and I would like to invite them once more. Please ask questions, because we want to challenge the technique. Like just Annabelle, David, Jacques Hongier, Konstantin, Laura, Margarita, Nick, Peter, Ralph, Romain, Sheila, and so on and so on. Please, people, raise your voice, ask questions, and involve in the discussions. We know you're here. now you.
Yeah. One question is, if a pension plan, not the ones where I'm investing committees, would invest into cryptos or DeFi, what is the allocation which would make sense? Usually one says 1%, that's nothing, it's not worth bothering. 10% is very much,
Yeah, look, I mean, it is a volatile space, as you mentioned, right? So I would just really also reflect it in sizing the position. So, I mean, having 1% doesn't hurt too much when you lose it. I mean, depends, but always hurts, but it's 1%. On the other side, you have maybe 2, 3, 4% upside per year or whatever, it's who knows. So it seems to be nice risk-reward trade, 1% in my view, if you have the risk appetite to do that.
Absolutely. I mean, what pension funds are looking is definitely not a high volatility. Crypto, they do have a tremendous volatility, and personally I would see some kind as a niche product which has no correlation to the main market. And when we have there in a satellite something, a very small allocation, I think that's a good diversification then as well.
Are Swiss pension funds allowed to do it?
Yes, I mean not
ever.
We don't believe. Okay, I asked my legal company, and she pointed me to BVV2, and it seems like direct investments are not allowed at this stage. It's being discussed apparently. But you need to invest, I mean, it's part of the alternatives, obviously, and then you need to invest in diversified collective investment schemes or certificates. So that route is open for Swiss pension funds who want to go that route. And there are funds, in passive, long-only, market-weighted, everything, basically, even a FINMA-regulated one since a couple of months. So there are options to do that if they want to, yes.
Mm-hmm. Okay, thank you.
Maybe on the pension funds. Hello, Neda Derlokwa, nice to meet you. On the pension side, you mentioned that there are already pension funds investing in cryptos. Can you elaborate on this one? And second of all, do they have the experience and the knowledge to invest in those assets?
Yeah, so I was referring to a Swiss pension fund which actually has an allocation to a CTA portfolio, trend following portfolio. And a few of the CTAs have a very tiny allocation to the Bitcoin and Ether futures, so it's like 1% allocation, so it's really, really tiny actually. So the answer is, I mean, to be honest, we don't see outside of that space which has entered. We don't see, I mean, there are also other hedge fund strategies like global macro, etc. But outside of that space, we don't see much interest for that. As you point out, you need the expertise, you need specialists, resources, you have reputational risks. I mean, we saw everything. So it's probably not the easiest asset class.
I just can echo that. I think it's very difficult in a way. I mean, you source it out, the knowledge then to a specialist who has then a fund or building a fund out of it. Within that, I mean, you lose all the advantage of a direct business with the blockchain. And in my opinion, as we have said, it's just an experimental phase on that. As soon as it becomes commodity, then it's definitely interesting, but it could also be something different. I mean, yesterday we were having discussions, hey, what is then the value of a Bitcoin, or what is the economic value behind? Because it could be also the same when I have some art investments, or when I invest in pictures, like Pokemon pictures, like my son is doing. I mean, that is also a value creating for a certain community as well. And you need the specialist definitely to know about those trends then as well.
Super. It's Peter Rickelghan is, or can be seen here, is a first person from the outer space that is daring to dial in. Peter, hello, welcome to the conference.
Zurich.
Hello from Zurich. You know, from where are you dialing in? 5 Points, Lettland, or what? No, it's great. Please ask a question. Introduce yourself briefly and ask a question.
I work professionally as a fund manager and obviously observe the whole crypto space. I found this concept of the 4% interest earning interesting. Could you please revisit this mechanism? How is this 4% earned? Someone has to pay it, I guess.
Yes. Very shortly, in my understanding, all these lending, borrowing platforms, the ones I have some knowledge, say takes a lending into a pool, and then there are the borrowers who pay an interest rate, which is higher usually. It's also a pool of borrowers, and these pools of demand and supply is coordinated by an algorithm which defines the interest rate. And
okay, that's the easy part. But for instance, if I want to borrow this crypto money, how much would you give me?
You mean interest rate?
No, what amount of money? Would you give me 1 million, 10, 100? How does this work?
What do you want to do with it?
Reinvest.
Into crypto or this compound product? Sorry, I missed something.
Yeah, just maybe you can jump in. I mean, you need collateral.
Okay, sure. Lend. Yeah.
So it's fully collateralized loans.
Fully collateralized. That's
they're even over collateralized.
Yeah, sorry.
So you cannot.
Yeah. You cannot borrow in this space without over collateralization, and there are algorithms which are checking it. There are even some players, crypto players, who can take profit by doing liquidation execution in the case.
Okay, but for instance, for me, why should I pay, say, 6% when I can get a loan for 1%?
It's a question of what you do with the money. If you want to
or is it a question of my credit rating, that only counterparties with a low credit rating would borrow at 6% because you need 1 or 2% margin.
Yeah, sure. You can borrow from different coins, from different platforms. And the platforms have different ratings. There is even a rating company in this space. And the borrowing rates differ between maybe 2 or 3% to 100% or more on an annual basis. Because there are different blockchains, coins in these ecosystems and so on. You can see lists of hundreds of different borrowing rates for different platforms.
Super. I think at this point, as you said, coffee or continuation.
Thank you for the question.
I think these are all wonderful questions, and these are the right questions. I mean, these questions we have to answer before or when we are investing as a pension fund or institutional insurance or whatsoever family office into such a product. These are the right questions. Thanks a lot. Thanks a lot, Peter. Thanks a lot, Michael. Thanks a lot, Thomas. I think we have really deserved now our coffee break. There's also other beverages and cakes. We will prolong the break because it's always important to break. We will start again at 16:15, so 4:15. Mm-hmm. Thanks a lot once more. Give him a hand.
Thank you.
Great. This was great. Thanks a lot.